Hey everyone, welcome back to Web3 Crypto, your go-to place for all things cryptocurrency and blockchain. If you're new here, don't forget to hit that subscribe button and click the bell icon to stay updated on our latest video. Many traders often jump from strategy to strategy trying to find the perfect one. But the truth is, each trading strategy has its own strengths and weaknesses, and the best one for you depends on your personal preferences, risk tolerance, and time commitment. Today we're going to break down the different types of trading strategies to help you find the one that suits you best. I will show you the different styles, and you have to find the best trading style that works for you. So let's get started. First up, we have day trading. This strategy involves buying and selling assets within the same day. Day traders capitalize on small price movements and usually close all position by the end of the trading day to avoid overnight risks. It requires a lot of attention and quick decision making. Day trading can be profitable, but it also comes with high risks and requires a solid understanding of the market trends and technical analysis. If you're considering day trading, make sure you are prepared for a fast-paced environment. Next, we have swing trading. Unlike day trading, swing trading involves holding onto assets for several days or even weeks to capitalize on expected upward or downward market shifts. Swing traders rely heavily on technical analysis to identify entry and exit points. This method requires less time commitments compared to day trading and can be more suitable for those who can't monitor the market consistently. However, it still requires a good understanding of market trends and indicators. Another popular strategy is scalping. Scalping involves making dozens or even hundreds of trades in a single day to scalp small profits from each trade. Scalpers take advantage of minor price gaps and market inefficiencies. This strategy requires a lot of time, focus, and quick execution. It's not for the faint-hearted, but can be highly profitable for those who master it. Then there is position trading, which is a long-term strategy. Position traders hold assets for months or even years, focusing on long-term gains. They rely on fundamental analysis to make their decision, looking at the bigger picture of market trends and the asset's potential growth. Position trading requires patience and strong understanding of the asset you're investing in. It's a great strategy for those who prefer a less hands-on approach. Lastly, we have algorithmic trading. This strategy uses computer programs to execute trades based on preset criteria. Algorithmic trading can process massive amounts of data and execute trades at speed impossible for human traders. While it requires technical expertise to set up, it can be highly effective and is used by many professional traders and institutions. And there you have it, a quick overview of the different types of trading strategies. Each strategy has its own pros and cons, and the best one for you depends on your personal preferences, risk tolerance, and time commitment. Thanks for watching. If you found this video helpful, give it a thumbs up and share it with a friend. Don't forget to subscribe to our channel for more crypto insights and tutorials. Until next time, happy trading and see you in the next one.